For very early investments, we look at teams which have an unfair advantage to win in the market that they've chosen. We look for teams that have a combination of confidence, but not this arrogance about the problem. And we look for teams that have produced some sort of design partners, prototypes, some sort of market validation and traction that their idea actually has demand in the market. What does a good early stage conversation look like? Usually a team that has a very good view into the market and the customer problem they're solving. They are approaching it from understanding the customer's pain point, understanding not just like what they need to solve, but like why would they want to solve this today? Why is this a priority to kind of have a compelling event? And then they usually have very concrete steps of how to build the company out, not just a vision, but the steps to kind of go from 0 to 1. I think those are key ingredients that are like important in an early stage pitch. How would a founder present themselves to an investor if they don't have meaningful revenues yet? I think the best way to do it is to highlight the customer stories of how the product is being adopted, what kind of customers are using it, what problems are they solving, how is it changing the life of the end user, the customer. Someone once told me that the best indicator for enterprise software is that it gets someone promoted in the customer. So if you can really show that you have these evangelists at the customer and how their job becomes better, maybe they get promoted or otherwise recognized, that's usually a good predictor for a successful product, and kind of packaging that all up for investors to consume when you don't have quantitative data on metrics and revenue can be useful.